Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Singapore Fintech Festival, and joining me for this segment, we have Kelvin C. He's the head of trading at Coinhako, to discuss what investors should consider as they think about entering the crypto market. It is great to have you with us, Kelvin. Welcome to Trade Talks.
Thank you. Thank you for having me, Jill.
And let's talk about that, the factors that investors should consider when they're thinking about entering into crypto.
I think in general, for anybody who wants to enter into the crypto market, in my view, there are three factors you need to consider, and how these three factors will interact with each other and commingle with each other. The three factors are macro, the macro environment, liquidity, and network adoption. So before this year, network adoption has been the dominant factor in determining price action. So in fact, the adoption rate of crypto over the past few years have been way higher than what we were seeing during the internet boom. This is for a variety of reasons, right? People are attracted maybe for the speculative gains, or maybe people are attracted for it as an alternative to the fiat system, or maybe as an investment to Web3 projects. Regardless, the network adoption dominated, and that resulted in the exponential price returns. But this year we saw a change. The macro factor, which is the first factor, started to dominate. So the macro environment started to dominate the price action. So what do I mean by that? The Fed's restrictive actions, or maybe the fears of recession, all this started to put pressure on assets in general, and crypto is no different as well.
Right.
Yeah. So that's the problem with that is that crypto is also situation is exacerbated by the second factor, which is liquidity.
Right.
Yeah, or lack of liquidity, right? So liquidity is very often misunderstood, because the problem with liquidity is that its behavior is non-linear. So what it means is that during stressful times, people who are actually looking for liquidity actually cannot find any liquidity, right? Yeah. So and crypto is a prime example of this. So earlier this year, everybody was on the same side of the trade, right? Everybody was max long. Some people were leveraged 100 times, right? And for those market participants who were looking for an exit door to get out of it, they suddenly realized there was no exit door at all.
Right.
So and that caused the huge drawdowns in crypto prices earlier this year, right? And that was and even some of the altcoins lost like 90% of their value, right? So for any investor that want to come into this kind of volatile space, we need to understand how these three factors, macro, liquidity, and network adoption, works with each other.
Yeah, well, it's really interesting because it was coupled with the macro, particularly when you look at the equity asset class. And we saw that massive valuation reset, which had to take place at the end of the day anyway. I mean, we're seeing it happen in the crypto space, we're seeing it happen with fintech startups and other areas of the market where the valuations were so high. They were being valued on forward projections and not the actual profitability and money that they're making now. And sometimes these things need to happen for the space to mature and to get more institutions to come into it. So when you think about potential areas where you will see mass adoption, what are you looking at as you move forward?
In my view, there could be three potential areas in where mass adoption can take place. First, as a new investable asset class. So we are all here because of returns and things like that, right? In investing itself, the holy grail is to have uncorrelated assets in your portfolio, because to diversify your downside risk, right? And other than the last 6 months, or the first 6 months of the year, crypto has generally been relatively uncorrelated with the other traditional asset classes. So in fact, the CFA Institute published a research report last year where they compared a zero allocation portfolio with zero allocation to Bitcoin. They were using Bitcoin as an example, versus up to a 4% allocation of Bitcoin to a portfolio. They found out that there was no significant difference on the downside between both portfolios, but there was significant differences on the upside, where the portfolio with the Bitcoin allocation up to 4% had significant better returns itself, which was interesting. So as these kind of view become more and more mainstream, as the next generation of people, the next generation who is already living in the digital world, takes up the mantle as the main investing group, the allocation of crypto in the generic portfolio will increase, and that will encourage mass adoption.
Yeah, well, I think investors need to be patient also, right? I mean, think about, even if we want to talk about the equity space, for the past 13, 14 years, everything has been up and to the right? And you expect these returns right away, but in order for the asset class to mature and you get a younger generation of investors, it's not going to go from 0 to 60 overnight, right? So I just think there needs to be some patience here. Let's talk about Coinhako specifically. What are you doing as you navigate the crypto winter and as you think about moving forward?
Yeah, so from what we are seeing right now, remember the liquidity and network adoption.
Right.
We are seeing that this is slowly to come back, and the previous cycle in crypto was actually led by individuals, by the OGs, the original gangsters, and the whales, and maybe the retail sector. But from what we are hearing, what we are seeing right now, the next cycle will be institution-led. And this will, when the big players like BlackRock, the pension funds and family offices start coming in, what they do with their size and their volume, liquidity will improve, right? And when liquidity improves, the network adoption will start to become the dominant factor again. And with this, right, why is this going to, why does this is good for the market? Because these players are more longer term. They are generally less sensitive to the current macro environment. So for Coinhako side, we are preparing to cater for the needs for these people to come in. So we actually take a three-pronged approach: custody, pricing, and products. So custody, institutional grade custody services for the institutions, because that's their number one concern. How safe will their assets be? Secondly, competitive pricing, because they are pretty price sensitive. And third, a comprehensive suite of products ranging from on and off ramps to yield generation to alpha generation, all the way to lending and borrowing. So essentially a prime brokerage service that we're providing, which is sorely needed in this crypto space.
All right, appreciate the insight. Thanks for joining us, Kelvin. And thanks for joining me on Trade Talks. We're at the Singapore Fintech Festival. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.